Silver doesn't have a finite supply. The cost to create more silver is not denominated in time. The ingenious thing about Bitcoin that Satoshi solved is in order to drastically increase the supply of Bitcoin and create a really inflationary period for Bitcoin and dilute everyone in a short period of time, you'd have to solve for time travel. I'm not joking. I'm not being theatrical. That's dead serious. It's denominated in time. So the man that can hyperinflate Bitcoin is the man that can travel in the future in 10-minute intervals. Unless you can solve time travel, Bitcoin is unbelievably secure at a predictable issuance that is not inflationary. Silver is not.
For the first time in years, the roles feel reversed. Crypto markets, once defined by explosive upside and asymmetric opportunity, have spent much of this year grinding lower, with many top assets down double digits. Meanwhile, precious metals have surged. Silver, in particular, has shocked almost everyone, ripping through decades-old resistance levels and finally pushing above its previous all-time high near $50, a level first seen in 1980 and briefly challenged in 2011. To many investors watching from the sidelines, it feels like history is repeating itself. To crypto investors, especially Bitcoiners, it's felt like salt in an open wound. As silver and gold prices soared, the tone shifted fast. Precious metal advocates began openly mocking crypto, calling Bitcoin digital money with no use, backed by nothing, and destined to fail. At the same time, some longtime crypto investors began quietly questioning their own convictions, wondering whether they chose the wrong trade, the wrong thesis, or even the wrong monetary future. And that emotional whiplash, that confusion between price performance and monetary truth, is exactly what Jack Mallers tries to dismantle in his latest Mailbag Monday podcast. Jack breaks down, with brutal clarity, why Bitcoin was engineered to solve a problem that silver, gold, and every commodity before it never could. If you found yourself shaken by recent market action or tempted to rethink why you chose Bitcoin in the first place, this is a discussion you need to hear all the way through. Before we dive in, take a second to like the video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
The point of this episode is Bitcoin is money. It's designed to be money. Something like silver is fundamentally not good at money. Why? Because it's a commodity. And I will guarantee you silver falls and is not able to sustain price levels like this for a sustained period of time. Now, as we know, if we know something about markets, it's that prices move. We know that. As Bitcoiners, we know that. Volatility is natural. It's like entropy. That was part of the last episode, right? But things like commodities, things we consume, things like real estate, which we'll get into in a second, are not money. We monetize them because this new fiat regime forces us to monetize things around us because the money itself that our government issues is broken. But they themselves are not meant to be money. So let's get into it. So for those that have been living under a rock, see this tweet here. Breaking, silver prices are exploding due to severe global supply shortage. We'll get into this in a second. The physical market can no longer meet soaring demand. And you see this silver chart. It looks like a meme coin. It is just straight up and to the right. There we go. So the fundamental question of this episode is, what actually is money? Is the dollar money? Is Bitcoin money? Is silver money? What's the difference between money and an investable good? I don't think society has a very good idea of what money actually is, the fact that it's a technology, and what makes a money good versus a money that's bad. So I have written here, good money is scarce, durable, divisible, and portable. It is hard to create, it is hard to counterfeit, and it is neutral to control it. The money that can come in my pocket, the money that I can put in my brain, in Bitcoin seed phrase, the money that I can put on a phone, the more portable the money, the more divisible the money, the more durable the money, and the scarcer the money, the harder the money, the better the money. There's something called a commodity premium. There needs to be a cost to create the money. For example, dollars at the Federal Reserve, it is effortless and free for them to create as much fiat as they want. Bad money, easy money, not good money. Conversely, gold, it costs money to dig it out of the ground. The question is, how much gold supply is there? We don't actually know the answer like we do Bitcoin. Bitcoin, we know there will only ever be 21 million. Gold, we don't know the answer, interestingly. There's a lot more in the ground. The problem is it costs a lot of money to get it out of the ground. And that is what actually makes gold relatively scarce. Gold is not scarce because there's a fixed supply of gold. You guys need to understand this. Gold is scarce because the gold that does exist out there, it's really expensive to go get it out of the ground. Which is interesting because as the gold price goes up, it makes it more economically viable to go get more gold that we know is on Mars, that we know is underground. So you have to have a cost to create the money. In Bitcoin and Satoshi, it was an ingenious invention to use proof of work and the difficulty adjustment. Bitcoin's monetary property here and the cost to create it is the most mind-boggling, ingenious invention I've ever seen. Why commodities fail as money? Commodities are meant to be consumed, okay? When prices rise, humans produce more, increasing the supply and diluting the value of the commodity itself. Let's use silver, for example, because I'll go on to this next slide. Elon, as silver's price has risen, Elon Musk has said, this is not good. Silver is needed in many industrial processes. I'll pull it up on Twitter because on my way over here to record this, I saw that a lot of US military equipment, if silver remains at this price, there will be shortages of things like jets and planes. Silver, we consume. Silver is what we use to build a lot of the appliances and the technology and the tools that we all live with in our everyday lives. Silver is a consumable market good. Do you guys remember in the earlier example where I said money is the thing you acquire not to consume? You acquire money to save it and to later exchange it. It's uniquely a thing you acquire not to eat it, not to build technology with it, not to drive it, not to fly it. You acquire it to save it. And people get this so backwards. So when I go to this tweet says, the story ends with silver crashing. This time won't be any different. And it won't be any different. And I can guarantee you that. And you say, well, Jack, how do you know? Well, I know because when you drive the price up of a commodity, all you're doing is building an economic incentive for people to go into the ground and get more. Silver doesn't have a finite supply. The cost to create more silver is not denominated in time.
To understand why Jack is so dismissive of silver as money, you first have to separate two things that markets constantly confuse: price performance and monetary properties. A rising price doesn't make something money, and a falling price doesn't disqualify it. Jack's argument begins at a much deeper level: what money is actually supposed to do. Once you understand that, the recent silver rally stops looking like a monetary awakening and starts looking like a textbook commodity cycle. And that brings us to the core distinction Jack makes next: the difference between assets governed by human incentives and assets governed by time itself.
The ingenious thing about Bitcoin that Satoshi solved is in order to drastically increase the supply of Bitcoin and create a really inflationary period for Bitcoin and dilute everyone in a short period of time, you'd have to solve for time travel. I'm not joking. I'm not being theatrical. That's dead serious. It's denominated in time. So the man that can hyperinflate Bitcoin is the man that can travel in the future in 10-minute intervals. Unless you can solve time travel, Bitcoin is unbelievably secure at a predictable issuance that is not inflationary. Silver is not. Silver is not guarded by time. It is not guarded by cryptography. Silver is in the ground. It's just how much do I get paid to dig it out of the ground? And so the price of silver will inevitably crash because as the price rises, humanity, it's like a bounty for humanity. Everyone's going to go now, dig more up out of the ground, Now, everyone, the US military, Elon Musk is saying we need to create a lot more silver because it's too expensive to build the products that everyone consumes and lives on. And so silver is actually a bad money. It's a bad money because we consume it. It's a bad money because it's not finitely scarce. It's relatively scarce, depending on how much I get paid to dig more up out of the ground. Obviously, if, a bar of silver is $79 and it costs me $80 to dig it out of the ground, I'm not going to dig it out of the ground because I lose money all day. But if to dig silver out of the ground costs me $40 and now I can sell it for $79, I'm going to dig more silver out of the ground until it's $40 again. Economic professors at universities, talking heads on Twitter, guys like Peter Schiff get this so fundamentally wrong because they say, I can't do anything with my Bitcoin. With gold, I can put it in jewelry. And that's why gold is more valuable. And it's like, no, you idiot. It's better that I can't eat the Bitcoin. It's better that I can't put Bitcoin in jewelry. It's better that I can't put my Bitcoins between two hot dog buns and eat it for dinner tonight. Because you guys, the money is not supposed to be consumed. If you are consuming the thing, you're not monetizing it. The money is very simple. It's what are you acquiring to save and then later exchange for things you need. It is specifically not the thing that you're acquiring to live in, to drive, to fly, to eat, to wear. Specifically not. And it's crazy because nobody in society understands what money is, the technological role it's supposed to play in the marketplace. And so Bitcoin is very different than a commodity because it is not consumed. We do not put Bitcoin in our iPhones. We don't use Bitcoin to build military equipment. And its supply does not respond to the price. Demand increases value, not production. Meaning, if you send the Bitcoin price to $1 million per coin, that does not incentivize a bunch of people to go get more Bitcoin out of the ground. You can only get more Bitcoin out of the future because Bitcoin's issuance is paid in time. You have to pay 10 minutes worth of energy to get more coins. So it doesn't matter how high the price goes. Unless you solve for time travel, Bitcoin is going to come out every 10 minutes no matter what. Stock to flow ratio is very simple. So great minds think alike. Luke tweeted this yesterday. He says the higher stock to flow ratio, the longer physical reality can be separated from prices via paper games. The point of stock to flow is very simple. It is stock to flow is how much existing stockpile is there. So how much supply exists of a thing, any given thing. And the flow is how much new issuance is there of said thing. And the stock to flow is how many years it would take, given the current issuance rate, to recreate the existing stockpile. Does that make sense? And so this gives you a measurement of how scarce something is, okay? And we can see platinum, palladium, silver, gold, Bitcoin. And in that order is the most abundant and the least scarce to the most scarce. For silver, given the existing stockpile of 550,000 and the annual supply growth of 4.5%, it would take 22 years for us to recreate the existing silver supply given on how much silver we're producing every year. And as the price of silver goes up, the production goes up. When the production goes up, there's more silver to sell in the market. It's more dilutive. It brings the price back down. And silver ends up finding a relative sweet spot of annual supply growth, which is 4.5%. Gold, you guys understand, gold is better money than silver. It's been monetized throughout history better than silver for this very, very simple reason. Because gold is scarcer. It has a higher stock to flow. The annual supply growth of gold is only 1.5%. It's 1 to 2%, not 4.5%. That's the only reason gold won the monetary race against silver throughout history. And you see Bitcoin is tremendously more scarce than gold even. And what's really cool is, well, what's the annual supply growth of Bitcoin? Well, it falls every about 4 years because of the halving. And then eventually the stock to flow will be infinity because there will be no more issued Bitcoin. Bitcoin's the only thing in the history of mankind that is definitively scarce, that literally has a supply cap. There's no other monetizable good ever that's had a literal supply cap. So it'll be the first asset ever in the history of mankind that has an infinity stock to flow.
Jack's core message is uncomfortable because it strips away emotion, nostalgia, and price worship. Money is not the thing you consume. Money is the thing you save, a technology designed to store time, energy, and value so it can be exchanged later. Silver fails this test immediately. It's consumed, industrially indispensable, and economically incentivized to be produced more when prices rise. The moment silver becomes too valuable, it triggers a supply response. Miners dig more, governments intervene, industries push back, and prices are forced down. That isn't a bug. That's exactly how commodities behave, and it's precisely why they fail as money. This is why Elon Musk openly warned that high silver prices are a problem, not a feature. Silver is embedded in everything: energy systems, electronics, medical equipment, military hardware. If silver were allowed to freely monetize the way Bitcoin can, it would cripple global production. That's also why silver has a long, well-documented history of price suppression and paper manipulation. Governments and industries cannot allow silver to become scarce money, because doing so would weaponize a critical input into civilization itself. The market will always step in, through incentives or force, to keep silver affordable, abundant, and consumable. Bitcoin is different because it removes humans from the supply equation entirely. Its issuance doesn't respond to price, demand, politics, or industrial necessity. It responds only to time. Every 10 minutes, new Bitcoin is issued, no matter how high the price goes. No mining boom, no emergency production, no political override. To inflate Bitcoin, you would need to access future time itself. That's the breakthrough Jack is emphasizing. Bitcoin is the first asset in history whose scarcity is enforced not by cost, not by geography, but by cryptography and physics. It doesn't care what humans want, and that's exactly why it works. Before you go, I just want to say thank you. If you've spent any time with us this year, whether it was one video or dozens, we genuinely appreciate it. As we head into the new year, our goal is simple: better energy, sharper structure, deeper analysis, and more respect for your time and intelligence. We're committed to raising the bar on every video we put out. If there's anything you'd like to see more of, topics, formats, guests, or ideas, let us know in the comments. We're building this channel with you, not just for you. Wishing you clarity, conviction, and a strong year ahead. And we're looking forward to spending a lot more time together next year.